After a nice drop earlier in the month, mortgage rates have traded sideways for the better part of the last 3 weeks. In fact, I haven't even posted updates the last 2 weeks while I was actually on vacation. But the good news is not a lot happened, but that is really the quiet before the storm coming over the next 2 weeks. So let's take a look at the last 2 weeks, where we're currently at in interest rates and what's likely to come as we get payroll data and the Fed meeting the following week. We normally look at the daily candles and you see all of the movement. Sometimes it's helpful to step back and look at this chart that just shows you 1 week at a time. Each one of those candles that we're looking at here is an entire week's worth of trading. And if you look, those two pink lines at the bottom, we've been in between those lines at 3.78 on the low end for the 10-year Treasury and 3.90 on the high end for the better part of a month now. So if we actually zoom in and look at the daily chart, looks like a little bit more activity. We can get focused on what the bonds did today, but week over week, not seeing a lot of activity. So what is important here, you see the two green bars and that down channel. We actually, when we had that big dip earlier in the month, dropped down and we have a new lower channel that we're trading in. Why is that important? Because right now we're towards the high end of that channel, which will likely hold and continue to push rates lower. So let's take a look. What is moving the market right now? So this week we saw the PCE report, that is the Fed's preferred measure of inflation. When they look at that, what did they get? They saw basically exactly what they're expecting. 0.2% month over month change. The year over year was at 2.726, whether we're looking at the core or the headline measure. But it was exactly what the Fed expected. Didn't really move the market today. So what is important is next week, next Friday, we get probably the most important thing that the Fed's looking at, which is the monthly non-farms payroll report. We'll get the weekly jobless claims on Thursday, and then on Friday we get non-farm payrolls. Then the headline is showtime. The following week we get the CPI, which is what the market has been looking at more closely as a gauge of inflation. But more importantly, right after that on the 18th, the Fed meeting. So let's take a look here. Why do those things matter? Why does inflation and employment matter? Well, last Friday, we had the Jackson Hole Symposium, and Fed Chair Powell spoke and gave his deepest insights into where the economy is and what the Fed is likely to do with interest rates. So what he said is the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. We will do everything we can to support a strong labor market as we make further progress toward price stability. So what he's saying there is they believe the battle against inflation is under control. If you look at the quarterly measure, even going back to the last 6 months, they are right there in that 2% range, which is where everyone would like to see inflation. If you look at some of the inflation nowcasts, it shows that we're below 2%. So we're not, again, talking about the level of prices, which are elevated due to high inflation over the last few years, but the ongoing rate of inflation and how quickly they are increasing going forward. Well, let's take a look what that actually means. So as of today, Mortgage News Daily, again, you'll see the rates are slightly up over the day from yesterday, 6.43, FHA at 5.82, and VA 5.83. So again, well-qualified borrowers shopping with a broker such as myself, you're probably going to get better at rates than that. If your credit is a little bit challenged, might be slightly worse than that. But really want to show here, week over week, pretty much flat. Over the month, which includes that dip we saw, we're down about 0.3% across the board. And most importantly, when you look at the 1 year, we are essentially down over the year and near the 1 year lows. So all signs are good for mortgage rates today. Are they great? No. 6.43 is not what someone's going to be looking forward to after a few years of 2.5%, 3.5% interest rates, but they are definitely trending in the right direction. So if we get a weak jobs report next week, we get a good CPI read, the Fed is possibly going to come in with a 50 basis point cut. The market is probably already priced in 25 basis points, but we might get 50. And even if we don't, then the market's going to flash forward and start looking at the two remaining meetings over the rest of the year. We get another meeting in November, another one in December, and we're likely to get at least another 50 basis points of cuts. So again, keep watching the data. As long as we see the unemployment rate slowly ticking up, hopefully not too fast, as long as we see the inflation continue moderating and coming down, we're going to see interest rates continue to improve. If you bought in the last couple of years, you have one of those higher interest rates and you want to see what's possible in terms of taking advantage of today's lower rates, reach out, give me a call. Would love to help. If you've talked to someone else, you want a second opinion, you want to make sure you're structuring that loan right, please. You want to make sure you're dealing with an expert. I see crazy things all day, every day. Had a gentleman in Las Vegas reach out to me yesterday, $300,000 loan to get his interest rate down 1%, which would have saved him about $200 a month. They were suggesting that he had $15,000 to his loan balance. There is no world in which that makes sense. And unfortunately, I see mistakes like this made every day. I'm Josh Lewis, a certified mortgage consultant with 30 years of experience helping people just like you. We appreciate the support. We appreciate you watching. If we can be of any assistance, reach out, email, call. All my contact information is in the description below. Have a great week, and we'll see you next Friday.